On June 23, we saw one of the biggest changes in the crypto space. This is where the Fed said it would no longer use image risk as a reason to oversee banks. This was directly about how they dealt with crypto. In a memo released on Friday, the central bank said it would take out the term debanking from exam manuals. Lawmakers say this was a big reason why crypto firms and other businesses lost their banking relationship. Instead, the Fed says it will focus on specific financial risk. If I'm not mistaken, the Fed is the last major banking regulator to actually get rid of the term. Okay, so this also fit with the Fed giving banks the go-ahead. They said banks could get into crypto as long as they followed the rules. But this took place in June. Why do I need to bring this up again? This is because right after that, we saw a very important statement from JP Morgan. There had been 3 days since the Federal Reserve said that banks can get into crypto as long as they follow the rules. Also, JP Morgan had filed a trademark for JPMD, which would cover crypto dealing, digital currency issuance, and blockchain custody services. Virtual and digital currency, digital tokens and payment tokens, decentralized application tokens, and blockchain enabled currency are just some of the digital assets that can be traded, transferred, and paid for. It also offers custody services, electronic fund transfers, securities brokerage, real-time token trading, and safe online financial operations. What did I say? As soon as we saw JP Morgan jump in, I said that all major banks would follow through because this is the biggest bank in the world getting involved with stablecoin and tokenized accounts. It sets the story when we think about how big that is. All of the big banks are going to do what JP Morgan does. Most of them already test and use private blockchain technology for this purpose, like JP Morgan did with private Ethereum through Onyx, which is now available on Base with Kexus. Now that this news came out, a few things broke. In 2026, Deutsche Bank will start a service to store crypto. This was really big. Then by the summer of 2026, Germany's biggest bank group, Sparkassen, will let regular people trade crypto. $5 trillion, 0 cents. Fidelity is one of the companies that wants to become a Bitcoin and crypto bank. Banks are coming. This is very big. Kazakhstan wants to set up a state cryptocurrency reserve that will be run by its central banks. All the big players are now coming in. When we think about what's going on, the big banks are getting ready to put all of their money into crypto. Why? Why now? Because the market is getting bigger. Things are about to become clear for crypto. Both the steady coin law and the market structure law will be fully passed by the end of August. When we think about how crazy this is, the trading side of the market is about to get very hot. There will be a lot of big banks, Wall Street firms, and asset management firms involved. Like I've said for years, we need to get ready before the big players like banks, large clients, and other well-known names join the game. We got there early. Now we're starting to see the big banks really get into crypto. This will cause a lot of people to use it because their customers will be pushed right into it. Even JP Morgan can see what services they want to give. Deutsche Bank is also the biggest bank group in Germany. All of this is based on, crypto trade for regular people and crypto storage services. This also includes security services, trading, payments, and Fidelity, right? In a way, they also want to become a crypto bank charter. They want to fill out this form, and that's so they can offer crypto services. Even stranger is the fact that central banks are also getting into crypto. It's important that I bring all of this up because we just saw Circle apply for a national trust bank license in the US. It happened on June 30. It was clear that Circle's move would cause a lot of trouble in the market right away. A huge number of people said, we're going to see this name and that name, and all of these names apply for a national trust bank license in the US. Also, guess what? They were right. It was very clear. That's what we'll talk about next. But we have this plus circle from Eleanor Torre over here. Several crypto companies, such as Fidelity Digital Assets, have also asked the OC for national bank charters. By the way, the OC gave all the banks the go-ahead. The OC, the FDIC, and the Fed all said that banks could get into crypto. All of them could get into crypto and offer services based on crypto. This would let them work between states without having to get licenses to send money. Also, Ripple does have a money transmitter license in almost all states, which is a big plus. The applications show that there are more and more companies waiting in line to be approved by the new crypto-friendly OC chair, Jonathan Gold. Gold has not yet been confirmed by the Senate under the Biden government. Anchorage Digital was the only crypto company that was given a license. Now, one thing I've said many times is that I think Ripple should become a bank. Okay, we've talked about it for a long time. In fact, I said that Ripple was on track to become a bank as early as April 2024. Now add in the stablecoin that Ripple is launching, and it all makes sense. People have thought about this since 2020, and it looks like it's finally going to happen. I also think that the XRP system and XRP will be very important. Pay attention to the steps that are being taken now. We can see that Wrath of Conan's post from April 12th talks about XRP ledger tokenization, NFTs, AMM, liquidity pools, KYC and AML custody, regulatory compliance, DID, and now possibly lending methods, XLS66D. It might look more and more like a bank if you squint. The cherry on top will be the first word here from Anderson about making their own stablecoins. We do have the stablecoin, so if we look at what Ripple is doing now and where they stand, we can see that they are basically turning into a bank. Now, Ledger Insights did say something about this. They said Circle had put in for a charter to become a national trust bank. The next step is a Fed master account that lets stablecoin holdings use money from the central bank. Ripple also tried to get RLUSD a master account. Why? For formal use, the chance of success. Right now we're going to this post. They do break down some things. In the first place, Circle does talk about how BlackRock can link to Circle. There are also a few other players like Paxos, Gemini, and even Ripple as a Ripple subsidiary that are looking at getting their own state-chartered licenses and trusts. If we scroll down, we can see some quotes from Jeremy Allaire from Circle. By applying for a national trust charter, Circle has taken steps to make our USDC infrastructure even stronger. This would help build important neutral market infrastructure that the world's most important organizations could use. Very interesting. Now that we're down here, we have Ripple and capital from the central bank. Custodia Bank famously tried to open a master account but failed, and they then sued the Federal Reserve. Kraken Financial, Wisdom Tree Trust, and even Standard Custody and Trust are some of the other companies that have files waiting to be approved. Last year, Ripple bought Center Custody, which is also the company that makes Ripple's ROUSD stablecoin. The Federal Reserve thinks of all of these institutions as Tier 3, which means they are not tightly controlled. Because of this, their applications are more likely to fail because they have to go through a stricter review process than banks that are subject to more rules. In this case, Circle's suggested structure could give them an edge over their competitors. A Tier 2 bank, like an OCC chartered national trust bank, would have a better chance of getting a master account for safe coins that want to be used by institutions like Circles and Ripples. They need to be as close as possible to central bank money.